Welcome to our second quarter video commentary. My name is Andrew Grinstead and I'm the CEO of Leavell Investments. Every quarter it seems like there's so much we could talk about, but we always want our investors to focus on the big picture. And so this quarter, there are three big stories that were in the news that moved markets. One was the Israel-Iran conflict, two were the tariffs, and three, there was discussion of the US budget deficit. All three of these important stories, let's just focus on one so we can derive some investment principles from the story. If we look at the big, beautiful bill, there's a lot of angst over whether or not it will create more deficits. How should an investor think about budget deficits? I think it's important to have an economics framework. And I remember my first day of college economics class, the professor defined economics as the study of the allocation of scarce resources. Now, within that study, there's obviously normative statements. Those are questions of what's fair and how should resources be allocated from a fairness perspective. But there's another side of economics called positive economics where we really focus on just the accounting for those resources. And that's a lot less controversial. So that's what we're going to focus on here. How are resources allocated across the economy? Economists usually talk about three sectors: the private sector, the public sector, and the foreign sector. In the US, the foreign sector would be anyone outside of our economic sphere. And the private sector is, of course, both households and corporations. And the public sector is the government. I think it's well known that the US government is running high budget deficits. But what does that mean for the context of those other sectors? In the economics framework, all resources must be accounted for and net back to zero. And so if someone's producing more than they consume, someone else must be consuming less than they produce. There are plenty of voices today saying that the budget deficit is a problem. But let's think about that from an investor's perspective. If the budget deficit is large, that also means that there's a surplus somewhere else in the economy. And in the private sector, that would mean that either households have more savings or corporations have more profits. So from an investor's perspective, the question is, will corporate profits stay high? For corporate profits to stay high in this economic framework, there must be deficits somewhere else. And so with this big, beautiful bill, at least at its current rendition while we're filming this video, it looks like budget deficits will stay high. And that would argue that there's support for high corporate profits. But if this were to change, it might change your view about corporate profits going forward. And that's why we at Leavell always stand ready to visit with clients, to bring a team to the room where we talk about your personal situation with our investment counselor, but the entire economic situation with our portfolio managers. And they look at that situation and think about how it applies to your portfolio and your goals. And so in these videos, we're trying to stay at a high level, but if you would ever like to sit down and go into more depth about these questions, about these sector balances and how they impact you, we'd love to have you come in and visit with us.